This is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors, coming to you today with our Markets with Megan podcast. And we're going to talk about some of the economic data this week we've seen, and primarily from the service sector. The service sector of the U.S. economy is important because not only has it been very resilient in this slowdown, but it is where consumers spend the majority of their money, is on services, not necessarily goods. What we saw this week was that the ISM Services Index fell to a year-to-date low. But when you look underneath, which is what we really like to unpack in this, it's actually a much weaker report than even the headline can suggest. Whether you look at things like the backlog of orders. So right now, the backlog of orders is at the lowest level we've seen since the Great Recession back in 2009. That means that the orders have all been cleared out and there aren't really new orders replacing them. We've also seen that the employment component, which has been very strong and also been translating into some of these monthly numbers, that actually fell into contraction territory, which is a level below 50 in this index. So underneath, there's a lot of weakness in this report that we've seen this week. This confirms what our view that the economy is slowing pretty rapidly, likely to enter into recession, and that we will start to see some of these blockbuster jobs reports slow as we see some of these underlying details in these reports also reflect that weakness. As far as the headline, I really can't say that the headline is going to be any different than what we believe. It was a very poor report, and underneath of it, it's even weaker. So we'll keep watching this from an economic standpoint. It doesn't surprise us that this would be one of the later shoes to drop, but we are seeing it. So if you have any questions, please, or feedback or any podcast ideas, we're welcome to them. Feel free to reach out to podcast@verdence.com. Thank you.